Hello, friends. Welcome to OAVA's weekly update on money and markets. We begin this week with update on US bond yields. The 10-year US Treasury benchmark touched a 16-year high of 4.85% and ended the week around 4.75 levels, having risen more than 130 bips during last 5 months. Strong economic data in the US, including tight labor market conditions and hawkish comments from the US Federal Reserve officials, have raised bets that the interest rates will remain higher for longer, leading to a spike in bond yields. Some analysts feel supply concerns and high fiscal deficit may also be an additional reason for increase in US Treasury yields. The 10-year Treasury is also the default benchmark cost of capital for the world, and hence there are bound to be repercussions on the monetary policies of most countries. The record rise in US Treasuries and other global bond yields is also leading to a decline in gold prices. Gold prices do tend to have an inverse relationship with US bond yields. Recent Fed rate rises, hawkish commentary by US Fed officials, and higher rates have led to gold prices touching a 7-month low of $18.15 per ounce. Gold prices on MCX is currently quoting rupees 56,734 per 10 gram levels. The rise in the US dollar index is also a reason for the fall in gold prices. Analysts feel the near-term trend for gold prices continue to look unfavorable. Moving on to domestic news, the Indian economy continues to see several bright spots. The services sector is definitely one of them. In the recently released data on Services PMI, that is the Purchasing Manager Index, for the month of September, the index recorded a level of 61. A reading of over 50 on the index indicates an expansion in activity levels, and September's number, though slightly lower than the 13-year high of 62.3 in July, still indicated one of the strongest upticks in output in 13 years. Apart from this, passenger vehicles recorded the highest sales for September 2023 at 363,733 units sold. Easing chip shortages, rising demand for passenger utility vehicles, festive demand were among the main reasons. India also continues to see robust monthly GST indirect tax mobilization with Rs 1.62 lakh crores reported for the month of September 2023. UPI transactions breached the 10 billion mark for the second consecutive month in September as well, signaling the broad acceptance and usage of this digital payment channel. And finally, we end this weekly update with RBI's Monetary Policy Committee review outcome, which was announced on October 6th. As expected, RBI MPC kept key rates unchanged, so the policy repo rate stands at 6.5%. RBI also kept the monetary policy stance unchanged by majority vote as withdrawal of accommodation. As per the RBI governor's statement, the MPC remains highly alert and prepared to undertake timely policy measures as may be necessary in order to align inflation to the target and anchor inflation expectations. The incremental CRR, that is the cash reserve ratio, which was imposed in August as a temporary measure, is now being discontinued from October when festive demand is expected to increase cash demand. Given the volatility in crude oil prices and global financial markets, as well as mixed forecast on domestic food prices, RBI will continue to carefully monitor incoming data and be vigilant as per the governor. That's it from us this week. Do click like and share our content if you found it useful, and do visit our website www.oava.in for information on our courses.